Hi everyone, it's a daily 10-minute business and finance news wrap for this Tuesday, the 29th of March 2022. Later, we'll check in on the markets with Robert Talevski from Activus Investment Advisors, but first to women and economics. A new Reserve Bank survey has found a confidence gap between girls and boys studying economics, which may be leading to a diversity problem in the profession. In fact, boys outnumber girls in Year 12 economics 2-1. So how do you fix it? Well, one way is to showcase female success stories in economics. And for more, I spoke earlier with Leonora Risse. She is a senior lecturer of economics at RMIT. Leonora, first of all, why is the economics discipline so important?
Well, hi, Ricardo. Thanks for having me. This is a key question. Economics is actually related to so many parts of our lives and so many decisions that are made by government. So if we have an understanding about economics and we have more people studying economics, it equips us to be able to make sense of government decision-making, to be able to make sense of the news when we hear about interest rates, inflation, the budget, to be able to differentiate between what's political spin and what is factual reality. So equipping people with economic knowledge is important to make them an informed citizen and participant in our society. And on top of that, economics plays an important role in all government decision-making, in the way that businesses operate and the way that people make everyday decisions. People think economics is about money and finance and profit, but actually economics is about understanding how governments and businesses and everyday people make decisions to optimize well-being.
So why do you think there is such low participation of women in economics compared to men?
Economics is similar to many other fields like science, like engineering, where traditionally it has been a male-dominated field. And even if there were females in the field, often their contributions were dismissed or overshadowed. And so we carry that history with us. And it also means that if you're a female in the field, when you look around, you see predominantly more men and more men being elevated into positions of leadership. And so it can convey a sense that you don't really belong, that you are in the minority. And that can influence students' decisions whether or not to stay in economics or to go off into another field.
The RBA recently released a report that says there is a confidence gap between young women and young men in that they both generally know their stuff, but girls aren't as confident. So it stops them from taking on further study in the field or getting into the industry. What do you think?
When we're talking about confidence, it's a tricky topic because women aren't just naturally born with less confidence. It's a reflection of the environment that we find ourselves in. And so if female students are reporting lower confidence than their male students, this is an indication that the environment, the culture, the way that girls are being treated compared to their male counterparts is different. And so it can lead to women starting to doubt themselves when they feel like they are in a minority.
Okay, so how do we fix it? The RBA in its latest report has suggested 3 key things. For example, more female teachers, more visible female mentors, and more involvement by the likes of organisations like the RBA within schools. But what do you think?
So the one thing you don't want to do is tell girls to be more confident, because that's not the problem here. The problem is the overall way that we teach and we deliver economics and the culture of economics. Do we teach economics in a way that is meaningful and purposeful for students? What we know from the next generation coming through is they're looking for fields of studies and careers where they can make a difference in the real world and to tackle some real world issues such as climate change, poverty, inequality. And economics actually offers the tools to be able to contribute to those real world problems and to solve those real world problems, but we don't do a very good job of selling it. In comparison, if you look at STEM, for instance, and healthcare, they've done a great job of inviting more females into those fields because they've drawn the connection between the field of study and the practical usefulness. So part of encouraging and supporting not just more women, but just a more diverse range of people into the economics profession is about the way that we communicate what economics is about. And I agree that going into schools and connecting students to real world economists is part of that, so that they can see a human face and a story behind what economics is about.
Leonora Risse there. She's a senior lecturer of economics at RMIT. And next I spoke with Jo Masters. She's the new chief economist at fund manager Barrenjoey. And I first asked her what inspired her to get into the economics field.
So I studied economics at school, but really I guess my inspiration came from the fact that I grew up in Hong Kong, which is very much a city centred on commerce and finance. And I guess it was part of the conversations that I had at home and at school and with parents of friends. And that inspired me into studying economics. And look, at the end of the day, I was also good at it at school, and I think that helps.
So how did you start, and how long have you been in the business?
So I've been in the business right from the very start of my career. I was really fortunate. I spent most of my summers at university doing a variety of internships, and I was really lucky that I worked for several summers up in Hong Kong for a funds management company under a very well-known economist who inspired me and also published my first piece. And that really started my love of financial markets, of the interaction of economics with the economy.
Working in a male-dominated industry though, what kind of challenges have you had to face, and did it ever put you off?
It didn't put me off, which is probably because I was too naive to think about it or didn't really know anything differently. And I guess I come from a family of 3 daughters and a father who's always said, you can go and do whatever you like and the world is your oyster. In terms of working in a male-dominated environment, look, on the one hand, I've been fortunate to work with many men who have been sponsors, who have taught me a lot, who have supported me through my career. But there have been challenges along the way. I think being female in a male-dominated environment, sometimes it's hard to feel included. There were issues about being seen and recognised and fairly rewarded. So I think, that's very important. The most challenging time was when I started a family. When I was working with all males that didn't have that caring responsibility that I did.
So looking back, what would you say is a career highlight?
Oh, there's been so many. That's the good news. And I hope there's many more to come. In fact, as you know, I've just started a new role at Barrenjoey, and that's a career highlight for me, to be the chief economist of a homegrown bank that's looking to do things differently, including on diversity's incredibly rewarding and exciting. Along the way though, broadly, look, I guess the highlight's been around, I realised that economics can make a difference. It is the policy levers that you pull to change the world that we live in, to make the world hopefully better for my children and young and new Australians more broadly. And that's a great honour, and it's something that keeps me very passionate about my job.
What would you say to a young person still trying to figure out what they may or may not want to study about the appeal of having a background in economics?
Just because you study economics doesn't mean you have to be an economist. At the end of the day, it's critical thinking, it's analytical skills, it's working with numbers, it's communicating and telling a story. And all of those skills are really applicable to many jobs that we have in our world, and many of the jobs of the future, those that won't get automated. I would also make the comment that when we think about economists, I think there's quite a stereotyped view of what an economist does or looks like, and that's just simply not the case. We know that there are economists like myself that work in consulting or financial markets, but there are also economists that focus on health, that focus on infrastructure, that focus on the housing market. So it really is an occupation that can take you into any part of the economy and into just about any professional career.
So the number of girls studying economics in high school is 1 for every 2 males. The RBA says part of the problem is a growing confidence gap. How do we fix it?
So we see females that suffer from confidence gaps in a range of areas, and it's of course really disappointing to hear, given I'm so passionate about economics. I often hear you can't be what you can't see. Now, I don't believe that's true, but I do believe it's easier to be what you can see. And so I think showcasing the range of female economists and economists from varied backgrounds is really, really important, not just in terms of what an economist does, but as I said, that wide range of jobs that economics can feed into. So I think that's really, really important. I also think that economics has a branding issue, if you like. There's a perception that it's too mathematical, it's too hard, it has too narrow a job prospects. We know those things are not true. So I think we just need to keep up the conversation, keep talking about really what economics is and what it can give you.
Joe Masters there, the chief economist at Barrenjoey. Okay, let's now take a look at the Australian share market, which rose ahead of the federal budget. The S&P ASX 200 up 0.7% to 7,464. Earlier, I spoke with Robert Talevski. He is the founder at Activus Investment Advisors.
So Australian shares remained in positive territory today, with the tech sector driving returns mainly, and after taking some lead from the US overnight, with markets up 0.33%. Gains were also supported by a surge in retail sales. Feb's retail sales number was the second highest on record, but offsetting this today was the consumer sentiment results, falling to its lowest level since May 2020. Equity markets continue to remain unsettled, as markets and investors continue to grapple with the uncertainty over the war in Ukraine, surging bond yields, higher inflation, increased US hawkishness on interest rates, looking more likely to increase rates by 50 basis points at the next meeting, and strong oil prices. Global equity markets have rebounded from their 13% falls in recent weeks to be only 6% off their highs.
The budget today, typically, does a budget move the market?
Typically, budgets don't move markets unless there's an effect by news, things like a game-changing policy. Investors seem to be more affected by news of rising inflation and interest rates. The risk is that the stimulatory budget could further flame an already hot inflation rate, expected to hover near decade highs. Elevated living costs further put pressure, along with increasing interest rates, squeezing the consumer even further.
You mentioned earlier tech stocks leading the way today, but they've been very volatile of late. What do you make of it?
Yeah, so we've seen tech stocks such as Afterpay's parent Square rise 7% today. Interestingly, overnight, Tesla's share price increased, adding $85 billion to its market cap in response to an announcement on stock split. Now, that $85 billion is more than the market cap of General Motors in total sense. So tech stocks have recovered somewhat, with chip makers really sort of driving that charge, and Nvidia in particular. It's too early to say whether this recovery will remain. With particularly as we keep sort of hearing more about interest rates increases, and this really tends to be a negative thing for the tech sector going forward.
Okay, and again, it's all about inflation at the moment. So given where we are at, the rising inflationary story, is that changing the way you're investing right now?
Yeah, consumer sentiment is worth keeping an eye on, and the response to rising inflation. As we've seen, inflation rates around the world are remaining near decade and multi-decade highs, and really remaining quite sticky with very little sign of it sort of falling anytime soon. Look, the average consumer is going to be put under quite a bit of pressure from escalating costs of living, increasing borrowing costs, and moderating house prices. Consumer sentiment measures can also provide us with a glimpse into the future. And if we start to see falls in consumer sentiment as we did today, or continuing falls in consumer sentiment and falls in consumption, which may lead into economic growth, there is some chance of the global economy being tipped into recession. Our outlook for markets remains the same. We're keeping an eye on three key variables: economic growth, which seems to remain quite solid at these levels, expectations around earnings, which should also remain positive in this first half of this year, and valuations, which are still relatively elevated compared to long-term trends, but not as elevated as they were in January. In terms of positioning, we are broadly neutral, probably a little bit more diversified than we were 12 months ago across geography, sectors and styles. We do have some level of exposure to gold across our portfolios, which has provided us with some good positive returns over the last couple of months, and exposure to infrastructure, which has actually provided us with some downside protection.
That is Robert Talevski there from Activus Investment Advisors.
This SBS on the Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.